Okay, so you guys can see my screen, right? If you can see my screen, raise your hand. Okay, nice. Okay, so from the questions I've gotten from you guys, I'm assuming that you guys already know what a share is, what dividends are, and yeah. So I actually thought I would start from the beginner level, but let me first start by answering the questions. So I hope you guys know what dividends are and what a share is. If there's anyone who doesn't know what a share is or what a dividend is, please raise your hand. Is there anyone who doesn't know what a share is or what a dividend is? Please type on the type on the chat section. Okay, nice. Okay, I have a question on ETFs. I have one. So I'm going to answer the first question, which is what is the best dividend stock to buy currently? That's a question by Eliud Koros. Okay, so I'm going to focus on the Kenyan stock market. So I hope you guys can see my screen. This is an article that I wrote yesterday titled Kenyan Stocks That Have the Highest Dividend Yield in 2022. So there's a difference between the dividend, the dividend per share and the dividend yield. So you might find there's some stocks that have high dividends, but the stocks are also very expensive. You might find a stock is offering, let's say, a dividend of 20 bob, but the stock price, or rather the share price, is at 400 bob, okay? And you might find another share that's at around 20, but offering a dividend of around 5 bob. So the second stock is offering a good dividend yield compared to the first stock. And let me first educate you guys on dividend. So what happens is most of the time dividend paying stocks are usually very popular with investors because they provide a regular, steady stream of income. And what happens that you can earn passive income from the dividends and at the same time benefit from capital appreciation. So most of the time historically, stocks that pay dividends have outperformed those that don't. Okay, so how do investors look at dividends? Or rather, now to answer the question that Ellen asked, most beginner guys will just look at dividends, the dividend per share, instead of looking at the dividend yield. You need to look at the dividend yield. Don't look at the dividend per share, look at the dividend yield. So what happens is investors will evaluate companies that pay dividends on the value of the annual dividends paid not relative to the price of the company's stock, which is known as the company's dividend yield. Let me give you a good example. So a stock that pays a yearly dividend of let's say 0.50 Kenyan shillings per share and is trading at, let's say, 10 Kenyan shillings per share, that stock has a dividend yield of 5%. I hope you guys can see my screen. This is the formula you use to calculate dividend yield from dividend yield. You take the annual dividend per share over the current share price times 100. That's how you calculate the dividend yield over stock. Okay. So let's go. So what happens is dividend yields enable investors to quickly gauge how much they could earn in dividends when investing in a certain amount of money in a stock. Let's say if a stock has a yield of 5%, then automatically you will know that you would earn 5 Kenyan shillings for every 100 bob you invested. If a stock has a yield of 5%, then at the same time you'd know that you would earn 50 Kenyan shillings on every 1,000 Kenyan shillings invested, and so on. And another advantage of looking at dividend yield, the dividend yield will help you compare different kinds of investments. So you might look at what am I getting from this investment as compared to other types of investments such as bonds and unit trust. So to answer your question now, I hope you guys now understand what a dividend yield is. If you understood what a dividend yield is, please raise your hand on the chat section. Nice. Can see you guys are good. Okay, so let's go to some of the Kenyan stocks that have the highest dividend yields in 2022. Note these according to the price of 1st December. That's yesterday. The market is still active right now. The market has just opened, so I'm going to use the figures for yesterday. I hope you guys can see my screen. So these are some of the Kenyan stocks that have the highest dividend yield. You can take a screenshot on your laptop. Let's look at the companies. We have the company. When I say ticker symbol means, you see, if the company is Umeme, the ticker symbol is UMME. So the ticker symbol is a combination of letters that usually represent a stock in the market. Let's say for something like Nation Media Group, you'll see the ticker symbol is NMG. Okay, for companies like British American Tobacco, the ticker symbol will be BAT. So that's what I mean by ticker symbol. When it comes to share price is just the normal. If it's 7.02, it's 7.02 Kenyan shillings. When I talk about final dividend, there's a difference between interim dividend and final dividend. So most companies will offer interim dividend and final dividend. For interim dividend is the dividend that's offered by a company before the company has released its final financial statements. Okay, so most of the time, a company will offer an interim dividend with maybe the earnings from the previous financial year, or rather the money it had in its account, sort of like saved, sort of like that. But the final dividend is the dividend that is offered after, not after the company has announced its financial statements, okay? Its annual financial statement. So the interim dividend comes before the final dividend. The interim dividend is offered before a company has announced, or rather released, its financial statement, and then the final dividend is announced after the company has announced its financial statement. Okay, so looking at these companies, these are the top 10 companies of December, the 1st of December 2022, that had the highest dividend yield. This means that if you are a dividend investor, these are the companies you would have wanted to look at, or rather to invest in. So the first company is Umeme, and Umeme, as of yesterday, was trading at 702 Kenyan shillings. You guys can take a screenshot of the screen if you can see it. I hope you guys can see my screen. Let me first confirm. Can you guys see my screen? Please raise your hand if you can see my screen. Super good. Yeah. So you can take a screenshot. This is the latest report. Okay, so we have Umeme, which has a dividend yield of 24.79. We have Williamson Tea, which is an agricultural company. It has a dividend of 13.33%. We have a Standard Chartered Bank, 13.10%. We have British American Tobacco Kenya, 12.36%. We have Crown Paints, that's 11.89%. We have Bamburi Cement at 11.37%. We have BK Group, 10.93. We have Capchorua at 9.52. Nation Media Group at 9.49, and finally ABSA Bank at 9.21. So to answer your question, Eliud, the best dividend stocks you can invest right now are these ones listed here from number 1 to number 10. These are stocks that are offering the best dividend yield in the Kenyan market. Let me allow you to talk. Are you good?
Yes, I can hear you.
You're good?
Yes, I've got an answer to my question.
Yeah.
But could you give me a specific between the 1 to 10, which one is the best?
Okay, nice. So personally, I'm not in a position, legally I'm not allowed to sort of like recommend stocks to buy, but I think definitely from the chart, from the list, you can see definitely the best would be the number 1, the company offering the highest dividend yield, basically.
Thank you.
Yeah. Okay. The second question was on what? Okay, we have one. Do I have to have an account with CDSC for me to trade with the Hisa app? Okay, that's a good question. Yes, you need to have an account with CDSC for you to trade Kenyan stocks on the Hisa app. And to open an account with Hisa, it's an easy process. You just click on just open your Hisa app, go to the invest button. Then on the far right end, you'll see a button written CDSC button. That's a button where you click and you'll be able to open a CDS account. What happens is a CDSC account is like a bank account. Let me try to paint the picture for you guys. So CDSC, the Central Depository and Settlement Corporation, the Central Depository and Settlement Corporation is the depository of shares. This is where the shares are deposited in a digital format. Okay. So what happens is for you to own shares, you need to have an account with the depository so that we can be able to identify these shares belong to client A, these shares belong to client B, these shares belong to client C. Okay, so that's why you need to open a CDS account, just like a bank account. The account number enables you to identify this customer has this amount in their account, and you can be able to transfer etc. That's why you need to open a CDS account. Please note that traditionally to open a CDS account, you needed a CDS1 form, but now a lot is changing, and now you can open a CDS account online using your broker. So for Hisa, we partnered with Faida Investment Bank, and now you can open a CDS account online on our platform because we have, and let me explain how that works. We have an API that connects the Hisa app to the CDSC system. So an API is basically a computer program that allows two systems to communicate. So we have an API that connects the Hisa app to the CDSC system. So you, instead of like the old days when you had to open physically fill the CDS1 form, you can just open an account online on Hisa using when you click on the Hisa button. I hope you guys understand. Let me share my screen. I think there's an article I wrote on that. Let me see if I can. Okay, nice. I think it would be good to take you guys through the whole process. I think that will be better so that you guys can understand what I mean. So let's start from okay. Let's start from how the Kenyan stock market works so that you guys can understand how one gets a CDS and all that. So the Kenyan stock market has various players, and this is how the ecosystem of the Kenyan stock market looks like. We have CMA at the top, then we have NSC, CDSC, then the CDS, the issuers and the registrars, and then we have investors. So let me just do a quick run through. Let's start with the Capital Markets Authority. The CMA is usually the regulating body charged with the prime responsibility of supervising, licensing, and monitoring the activities of all market intermediaries, including the Nairobi Securities Exchange, the Central and Depository System, and all other market players. Basically, simply put, CMA is the watchdog of the market. When looking for a stockbroker, ensure that the stockbroker is regulated by CMA. So that's the first step. You need to understand how does regulation take place. So the regulator of the market is called the Capital Markets Authority. That's CMA. These are some of the brokers that are regulated by CMA. We have brokers like Dan Blair, Suntra, Old Mutual, Faida, ABSA Africa, Genghis, NCBA, all these. These are some of the regulated brokers. Faida Investment Bank is our partner, so we work with Faida Investment Bank. After understanding regulation, let's talk about the Nairobi Securities Exchange. The Nairobi Securities Exchange is basically the market. This is where the buyers and sellers will meet. The NSE is the largest stock exchange in Africa and actually the fifth in Africa the largest stock exchange in East Africa and the fifth in Africa, sorry for that, valued at around, let me say $23 billion or 2.3 trillion Kenyan shillings. So what happens is the NSE is the marketplace. We have the CMA as the regulator, and then we have the NSE as the marketplace. This is where the buyers and the sellers will meet in the market. Note the NSE has 63 companies that are listed in various sectors. We have the agricultural sector, automobile and accessory sector. We have the banking sector, commercial and services, construction, energy, insurance, investment services, manufacturing, telecommunication, real estate, and exchange traded fund. Okay. So I think most of these sectors, you guys might understand the sectors. The two sectors that most guys find it hard to understand is the real estate investment trust and the exchange traded fund. So for the real estate investment trust, commonly known as REITs, you don't have to own an apartment for you to say that you are an investor in real estate. So what happens is for the REITs allow you to invest in real estate without actually owning an apartment. Okay. So what are REITs? REITs are companies that have pooled funds to invest in apartments, hotels, all those things. Basically, let me give you a good example, like the Kwetu apartments. The Kwetu student apartments are owned by a REIT called the Akon I-REIT. Okay. So we have two REITs in the Kenyan market. The ones I know of, we have the Akon REIT and we have the Stanley Fahari I-REIT. The Stanley Fahari I-REIT is actually listed on the stock exchange, on the Nairobi Securities Exchange. So for REITs allow you to invest in the stock, to invest in real estate without actually owning apartments. So you can invest in companies that have invested in real estate, and you become a shareholder, or rather a part of the shareholders of the real estate establishments. Let's go to exchange traded funds. Basically, they're known as ETFs. In the market, you hear people saying ETFs. So ETFs are usually a basket of various securities. And by securities, I mean they could be bonds, they could be shares, they could be commodities, all types of securities. Exchange traded funds are basically a basket of various securities. Let me give you a good example. In the US stock market, we have an index called the S&P 500 index. So the S&P 500 index, what it does basically, it tracks the performance of the 500 largest companies in the US, okay? Please note that the S&P 500 tracks the performance of the 500 largest companies in the US. So when you invest, we have an ETF that tracks the performance of the S&P 500 ETF. A good example is the Vanguard S&P 500 ETF. So what happens is when you invest in the Vanguard, when you invest in the Vanguard S&P 500 ETF, it's like you have invested in the 500 largest companies in the US stock market. Okay, so that's what we mean when you say an exchange traded fund. Okay, pardon me for that. In Kenya, we have one ETF. It's called the ABSA New Gold ETF. ABSA New Gold ETF. The ABSA New Gold ETF basically tracks the price of gold. And the ABSA New Gold ETF is actually a good hedge, because if you guys might know is that gold is considered a safe haven for investors. So normally during hard economic times, investors will invest in gold, and according to the laws of supply and demand, when more people invest in gold, the price starts to rise. And so what happens is one of the best investments during hard economic times is investing in gold. And once again, just like real estate, you don't have to own physical gold for you to be an investor in gold. You can actually invest in an ETF that tracks the price of gold. So we have talked about CMA, we have talked about the NSE. So CMA is for regulation, NSE is the market. And these are some of the companies listed on the Nairobi Securities Exchange, companies like Crown Paints. I know some of the companies, you guys might recognize the companies, okay? These are some of the top 5 best performing stocks in the NSE. We'll go through that later anyway. Then we have the Central Depository and Settlement Corporation. So this is the part where I want you guys to pay attention. So the Central Depository and Settlement Corporation is a limited liability company that's licensed and regulated by CMA, remember from the beginning, the first part, to provide automated clearing, delivery, and settlement services for transactions carried out at the Nairobi Securities Exchange, as well as holding listed and unlisted securities, including other documents of title on behalf of investors. So basically, the CDS, the Central Depository System, provides a centralized system for the transfer and registration of securities in an electronic format without the necessity of physical certificates. If you guys, what used to happen before, let's say 2004, when you own shares, you used to be given physical certificates for shares, but that changed. So to having digital, actually the shares are stored in an electronic format in the CDSC system. Currently, the total value of shares held by CDSC is 2.7 trillion, and the number of investors is 1.6 million, number of investor accounts held by CDSC. A brief history, in 2000, Parliament passed the Central Depository Act, which allowed the setting up of CDSC. Then came 2004, CDSC started its operation with the goal of mainly bringing efficiency to the depository and settlement activities of the exchange. And when I talk about depository, I mean, basically, let me put it like a layman. By depository, I mean like a basket. Like, yes, you've bought your shares. Where are your shares going to be deposited, or rather stored? Your shares are deposited in the CDSC system in an electronic format, right? Okay, so let's go to a CDSC number. Note, guys, I wanted to explain this step by step so that you guys can understand why you need a CDSC number. So a CDSC number is simply an official trading identifier number that every investor needs to be able to buy and sell shares in the Kenyan stock market. You can get a new trading account by opening a new trading account with a licensed stockbroker. Don't worry, we'll talk about that in the next section, which is the stockbroker section. So far we have talked about the 3 major players. We have talked about CMA, we have talked about NSE, CMA regulation, NSE is the marketplace, CDSC is the depository for shares. Now let's talk about the stockbrokers. Guys, please know that you cannot, as an individual, like say me and Eliud, Calvin, Edward, Eric, Eliud, Calvin, Edward, as individuals, we cannot access the market directly. So what happens? You need a middleman to access the market, right? You need a broker to be able to access the stock market, okay? So what brokers do, brokers act as the middlemen who facilitate trading on the NSE. Remember, NSE is the market. So for you to access the market, you need a broker, okay? Most brokers have actually allowed opening of a CDS account online through their trading platforms. Let's now go through how that works, okay? How is this possible, right? This is made possible, as I had told you guys earlier, by the use of an API, which is plugged into the CDS system. An API basically stands for an application programming interface. An API basically allows two or more computer programs to communicate with each other. It's basically a type of interface that allows two applications to talk to each other, if I can put it that way. So the API creates a link between the trading app and the system, the CDSC system, which is the depository for shares. Okay. So what happens is the API allows the trading app to plug into the CDS system, hence allowing investors to open a CDS account directly on the app. So I hope you guys can understand how you are able to open a trading account with Hisa, while in real sense, technically, you're opening an account with the CDSC in the CDSC system, okay? So note that traditionally, you needed to physically fill a CDS1 form when opening an account, but during the pandemic, most brokers petitioned CDSC to allow them to connect their trading apps with the system, the CDSC system, which now made it possible to open a CDS account online. In the past, it was not possible to open a CDS account online. Anyway, so I know one common question that most of you guys will ask is whether will I lose my shares in the case where the broker, let's say, goes under or bankrupt, or anything happens to the broker. Let's say Hisa is no longer there, Faida is no longer there. The answer is usually no. Why? This is because, as I've told you before, guys, your shares are stored in the CDSC system in a digitized format and not by the broker. The broker is just the middleman. So the broker just acts as a middleman who allows the investor to access the market, which is the NSE. Okay. Basically, let me now summarize everything. CMA is the regulator, NSE is the market, stockbrokers are the intermediaries who allow you as an investor to access the market. And then the CDSC acts as a storage or sort of basket in quotes for the shares. I hope you guys can understand so far. So what happens is a CDS account then helps identify the different shareholders and the shares that they own in the depository system, just like a bank account would help identify the different customers and the amount of money in the account. Okay. Now, finally, to answering your question, this is why you need to open a CDS account to be able to buy shares in the NSE. Otherwise, if you don't have a CDS account, how will we know these Safaricom shares belong to Calvin and these other shares belong to Mwaura? Okay. Okay. Please note, a final thing to note is it's possible to change your broker, but the CDS account that you are given when the moment you open a CDS account will remain the same, no matter the broker you go to, okay? This is because technically, when you open the CDS account, you open an account with the CDSC system, but with facilitation from the broker through the trading app. When you want to transfer your shares, there's a form you fill, which is called the CDS4A-B form. But at the moment, so much is changing, so that is going to be reviewed, so that even for transfer, just like opening an account, you can be able to transfer shares online. Okay. The final thing I want to talk about is settlement. Settlement is basically the process that marks the official transfer of shares to the buyer's account and cash to the seller's account. What do I mean? What do I mean by settlement? Settlement is basically you bought a share. But normally what happens in the market, when you buy a share, you're not a shareholder immediately. Okay. There's some period between when you buy a share and when the share belongs to you legally, or basically when the transfer is happening. Okay. This is called settlement. Traditionally, this process takes around T+3 days in the Kenyan stock market, which means that if you buy shares today, those shares will legally be yours 3 days after the day of purchase. I think you guys now understand why you need to open a CDS account and how it's possible to open one. If you guys understood all about CDSC, raise your hand on the chat section. Super, Calvin, Lawrence. Okay, nice. Okay, I think I've answered that one. So I've lowered all your hands. Anyone with a question now? Raise your hand. Anyone with a question? Peter has a question. Ezekiel has a question. Okay, let me start with Christina. Christina, what's your question?
Hi, can you hear me?
Yes, I can hear you.
Can you hear me?
Yes, I can.
So I'm asking, like now we're using FIDA investment.
Okay.
So if now, like the way we have the app, the Hisa app,
Yeah.
that means if I open an account and everything is processed, that
Yeah.
means I can now have a CDSC account.
Yeah. Yeah. Basically, you already had an account.
Okay.
You already had a CDS
Thank
account
you.
before.
No, I didn't have. So I will
Okay.
need to open one. So I'm asking because I know FIDA is a broker.
Yeah.
If now, like we're using the Hisa app, which belongs to FIDA
Yeah.
investment, and
Yeah.
they are a broker.
Yeah.
So that means if everything is settled from the Hisa app, that
Yeah.
means I have an account in CDSC.
Yeah. Because of the partnership we have with
Thank you.
FIDA.
Okay.
Yeah. Nice. Let me have Peter. Peter, please unmute your mic. Okay, let me go to Gateru.
Hello, can you hear me?
Yes, I can.
Yeah, I was asking.
Yeah.
I was in Kenya Kariuki stockbrokers before they went under receivership,
Yeah.
and I had an account there, CDSC account.
Yeah.
And it has been a while. I have not been there for quite a number of years. I was there, I think, 2007, 2008.
Yeah.
So what happens to my account? How can I activate my account?
Okay, so what you'll do is you will just type in your account number on the Hisa app, the CDSC part, and then if the CDS account is still there, you just click connect account. Okay?
Okay. And what about if I don't remember the number? Can I go to CDSC offices to get the number?
Okay, what you can do is send an email to CDSC.
Okay.
Yeah, just send an email to CDSC with your ID number.
Yes.
Yeah, and they will respond.
Okay, thank you so much.
No worries. Okay. Peter.
Hello, sorry, that was Peter. I think that was Peter. This is Ezekiel.
Okay, Ezekiel.
So I have a question. On my profile, on my CDSC profile, it shows me my CDSC number.
Yeah.
But then it shows me, however, it says CDS account connected. However, you need to set up a new trading account with Hisa.
Yeah.
So I clicked there, and then the message I got was, see, your CDSC account has been successfully created. But then that dialogue thing of create trading account is still there. It's like, I don't know if kama ilihang or something, or it takes time to, because when I go back to that page at CDSC, it still tells me that create trading account.
Okay. I think what you do, please send us a message on the app chat with the screenshot, and then we'll be able to help you. Like one of our customer service agents will reach out to you so that we can check.
When it says account has been successfully created, it means it went through, huh?
Yeah. It means it's successful. Yeah, that's what I'm saying. Just send a screenshot on the app section, on the chat, and then we'll be able to look at your account and give you a solution for that.
Okay, then a final question. Huh?
Yeah.
There was this thing where they introduced the account maintenance fees for CDSC.
Yeah.
I think back in May.
Yeah.
So how will that be deducted? Like, will you be cutting money from our wallet directly, or we will be having to make the payments? And when because it was a per month, 100 shillings per month payable annually.
Yeah.
So will it be a one-off payment in our accounts, or will it be done every month? I didn't quite get how that thing will be implemented. Maybe you can explain.
Yeah, basically what happens, it was actually a proposal, but it was not approved. So it doesn't apply right now. So there's no maintenance fee right now. Okay. Yeah. So what happens is basically the only fee that when it comes to maintenance is the one that the brokers charge. So you might find that let's say a broker charges, let's say like 200 bob or 100 bob per year for maintenance, and then the way that amount is charged, it's basically deducted from your wallet. Yeah, but that amount that was proposed early this year is not approved. So we don't have that charge right now. There's no maintenance fee from the CDS side. That one for like monthly maintenance fee. It's not yet approved. Let me, Christina has another question, or
Yes, I have.
yeah, what's your question?
I want to ask. So how
Yeah.
do you feel, or how do you evaluate
Mm,
the time,
yeah,
or what is the most advisable time to
yeah,
invest in stocks or
yeah,
dividends?
yeah.
Is it end year? Is it middle year? Is it first year? Or what's the recommendation for someone
Mm,
who would want to get a trade?
yeah.
Yeah, and how do you evaluate the company that you need to trade for or to trade in? Yeah.
Okay, that's a good question. So there's no like a time thing. There's no like a time thing for stocks. Basically, the major way to look at the shares is to look at the sectors and the various companies. So this would go to the little complex side of maybe looking at the financials and all that. So the major thing you can look at is, first of all, look at the dividends. Okay, so look at the dividends. Look at the dividend yield. The first list I put on the screen when we were starting the meeting. So that's the first thing you look at companies. And then when it comes to fundamental analysis, basically, we have various groups of stocks. So we have the growth stocks, we have the value stocks, we have the dividend stocks, we have the penny stocks. So don't look at the time of the year. You can't say that you're going to buy this stock at this time of the year, this stock at this time of the year. No, you just look at the different classification of stocks, and then look at the economic environment and how the economy is performing. So a good example is during high inflation, mainly what will happen is growth stocks will not perform well during high inflation, but value stocks will perform well during high inflation. So know that value stocks tend to perform better during high inflation, and that's one thing you can look at when investing, when starting to invest. So just first you need to understand the global macros, like what's happening in the economy, and then when you understand what's happening, then go to the various sectors. Which sectors perform well during which time? So like when it comes to high inflation periods, there are various sectors that perform well during high inflation. We have sectors like the energy sector. The energy sector performs well, really well during high inflation. And another sector that performs well during high inflation is called the consumer staples. By consumer staples, I mean, these are stocks that no matter how bad the economy is, guys, or rather consumers we still need to purchase these items. So what do I mean by consumer staples? Consumer staples would be, let's say, companies that offer food products, let's say, because no matter how bad an economy is, guys still need to eat. So that's how you look at when investing. You need to look at how's the economy right now, how's the market performing, and how do various sectors perform during various times. So I've told you, we are like, for this year we have been in a high inflation environment, and if you do your research, you can check even in the US market, the companies that have performed the best, actually the sector that has performed the best is the energy sector. The energy sector, we have petroleum companies, etc, etc. So companies that perform well during inflation, we have energy sector, we have the energy sector, we have the consumer staples, okay, and then a good sector, or rather a good category to invest in during high inflation would be dividend stocks. Why? Because the share might be performing badly, but the companies are still offering you dividends. Okay, so even if your share is falling, or rather the share is not performing well, you're still receiving dividends. Okay. Someone needs to unmute their mic. I don't know who it is. Okay. So I've talked of energy stocks, consumer staples, dividend stocks, and growth and value stocks during inflation. Another sector, a sector you'd like, and then for now let's look at the global market and what's happening. A good sector to look at, I want you guys to go and research about, invest in ESG stocks. If you check on our app, we have classified into various stocks. So look at ESG stocks. What do I mean by ESG stocks? The ESG basically stands for environment, social, and governance. Basically, these are stocks that are taking into consideration their effect on the environment. That's for environment. And then for S stands for social. These are companies that are really keen about the social relations. Let's say how employees interact, how employees are treated. And then G stands for governance. For governance, I mean, how is the company led? How does the board relate with the shareholders and all that? Actually, we have an ESG score, or rather an ESG rating. So you can look at the ESG score. Does this company have a high ESG stock? So look for ESG companies, or rather ESG stocks. Another sector that has really been performing well is the pharma and healthcare industry. By pharma and healthcare, I mean pharmacy and healthcare. These are companies that are looking for vaccines. These are companies that are looking for cures of various diseases. Okay, so pharma and healthcare, ESG stocks. Also, you can invest in commodities, just as I had told you guys about gold. So we have the ABSA New Gold ETF, which tracks the price of gold. So what happens is, actually they say that gold is actually God's money. If you can trace the history of gold, you'll see that gold was present even before we had all these other types of money. So what happens is, gold is considered a hedge against inflation. So when we have high inflation, you'd want to have gold in your portfolio. And as I had said earlier, you don't need to buy physical gold for you to be an investor in gold. You can just buy an ETF that tracks the price of gold. A good example in the NSE, you have the ABSA New Gold ETF. Another sector that you can invest in during high inflation is the real estate sector. Again, as I had said, you don't need to own apartments for you to be an investor in real estate. You can just buy, or rather invest in a real estate investment trust, shortly known as REITs. Okay. So those are the sectors to look at. And another interesting sector that I'm personally looking at is the EV sector, the electric vehicles. And so my concentration is on electric vehicles, pharma and healthcare, and ESG stocks. Yeah. I hope that answered your question, Christina.
Yes, it did. I still have another one.
Yeah. Okay. I think there's another one I forgot to add. Also, you can look at the sectors. We have seasonality in the market. So let me give you a good example. So let's say looking at agricultural companies, let's say like Akina Kakuzi, Kapchorwa, Kakuzi, Sasini. These are agricultural companies. And as you know about agriculture, we have seasons. Yeah, there's a season in agriculture where the company is actually producing well and actually doing more exports. You would expect the share to do really well during the high season, or rather, just like we have mango season, all that. So for agricultural companies, you need to understand their seasons. So you can buy during the low season and sell during the high season when the agricultural company will be performing well. Yeah. And a final one is, when it comes to value, for the long term, you can look at companies that have, let's say, have a proven track record over the long term. A good example is ABL. ABL has actually, I think ABL was celebrating their 100th anniversary, 100 years anniversary this year. So you can imagine a company has existed for 100 years. So these are companies that I would consider long-term companies. These are companies you just hold, or rather invest in, just to safeguard your money. These are companies that will have proven the existence over a long period of time, and they're good companies to basically, if you don't want to expose yourself to the high risk stocks. So the stocks like Safaricom, ABL, KCB, these are stocks that have high volatility, but are also stocks that have managed to prove themselves over time. And then the guys who, let's say, I'll call them speculators. Yeah, mostly the young guys. Yeah. So for the young guys, you would want to look for penny stocks. Penny stocks are basically stocks that are trading below 1 bob. We have stocks like, let's say, Uchumi, Transcentury, yeah? So these are stocks that are very high risk, but they also have high returns, the penny stocks. So when you download the Hisa app, go to the penny stock section and you'll see some of the penny stocks classified there. They're high risk, but high return, okay? Yeah, what's your second question, Christina?
I actually wanted to ask you to talk about the speculation part. I think you've mentioned.
Yeah.
And like the advice on how do you do it? Is there a way that you can do speculation or if I want to do speculation, what should I look at typically?
Okay, nice.
Is it even advisable in the first place, actually?
Okay. Personally, I would not advise you to do speculation if you're not an experienced trader. Yeah, it's actually risky to do speculation when you're not an experienced trader because you might end up losing your money. Yeah. So if speculation is mostly for the active traders who can actively look at the market. So for most guys who I would say are not experienced traders or rather beginner investors, I would recommend go for passive investing. Just go for this, what I would call like the sure stocks, like the big stocks, the big companies that have had a proven track record over time. Yeah. So when starting out, please avoid the penny stocks. Go for when setting out, go for value stocks, actually.
You said buying stocks.
Value stocks.
Value, okay.
Yeah. Gaderu has a question.
You can hear me?
Yeah, I can hear you.
So there's this thing usually called the derivatives trading.
Yeah.
And I think they've only licensed 7 members, and one of the guys who are licensed are Faida Bank. And since you guys are affiliated, is it something you guys are considering introducing to the app maybe in the coming months, where we can be able to like buy the futures contracts digitally? Because right now it's like a manual thing.
Yeah.
Because it's quite profitable, and I think maybe, I don't know, maybe something you can consider. I don't know if it's come up before. Maybe I can just give it as a suggestion also.
Yeah. What's happening
we can digitize
our main target is the retail investors, the common investors. And what happens is derivatives, the derivatives market in Kenya has had quite a huge issue with liquidity. Yeah. And so when it comes to having issues with liquidity, it's hard to introduce a product that doesn't have enough liquidity when we have products that have a more liquidity, or rather products that are moving, okay? But it's in the process, actually. That's why, as I mentioned earlier, there's so much that is changing in the market. But so far, we wanted to start with the shares and see how they perform, and then we can introduce new products in the market.
Okay.
Yeah. But the liquidity issue is actually a big issue when it comes to the derivatives market. Let me see some of the questions you guys had asked. So I've answered on dividends, I've answered on CDSC. Can you have more than one broker? No, you can just transfer from one broker to another. What do you mean by value stocks? Okay, nice question, good question. So we have various classifications of stocks. So we have value stocks and growth stocks. What are value stocks? Value stocks are stocks that are sort of, I would say, undervalued. Yeah. These are stocks that are going to perform well in the long term. These are stocks that are going to gain value in the long term. That's why they're called value stocks. Right now, I would say these are stocks that, basically putting it simply, these are stocks that are undervalued compared to their worth. Okay. Let me use growth stocks to differentiate between the two, between value stocks and growth stocks. Growth stocks, these are stocks that are performing way above the market average. value stocks are stocks that are performing way below the market average. So what are growth stocks? Actually, when it comes to growth stocks, I would actually classify tech companies as growth stocks. Basically, you see how the technology companies perform, like they are really moving, they are actually performing way above the market average. So those are growth stocks. These are stocks that have high return, but also have a high risk. Okay, these are the growth stocks. So most tech companies are considered growth stocks. But value stocks, these are companies that are performing slightly or way below the market average. Okay, and are expected to give a consistent return over time. So a good investor, or rather a good example of an investor, of a value investor, is Warren Buffett. Warren Buffett is a person who will identify companies that are performing way below their valuation, and these are companies that are sort of undervalued, and invest in them, hoping that in the long term, the company will increase in price. So that's what I mean by value stocks. For growth stocks, most speculators actually love growth stocks, the tech companies. So you bet on a company, and in the next like 1 year, the company has already risen, like, let's say 100% or 200%. Yeah, I hope that's clear. I'll actually be writing an article on that, so I'll send it on our WhatsApp group. Okay, another question. Christina, what's your question?
Let me get out of the noise first. Okay, so
Yeah.
So which company would you give examples of like, okay, do all companies have the gold stock and the value stock?
Yeah.
And in this case, in the Kenyan stock market,
Yeah.
which are the companies that have the value stock and the growth stocks? And then, okay, no, this may be needing me to do some research, but I would love to know what's the range of the stocks in value and growth. For example, say I've been seeing in the app there, but I'm not able to understand, like when they put 33, when they 33, or maybe another company put 240, like basically what do those numbers mean? But just help us identify the value stocks, the companies that give that, and the growth stocks in the Kenyan market.
Okay, nice. Basically, the numbers you see, let's say a share like ABSA is trading at 11.65 Kenyan shillings per share. We have companies like ABSA trading at 11.8, I think 11.8, Captoro at 105. Basically, it's, in the stock market, it's all about valuation, yeah? So what happens is, it's the investors, the law of supply and demand, that determine the value of a share. Okay, so there's a share price that's set at the IPO. Let's say Safaricom did the IPO in 2008. By IPO I mean initial public offering in 2008. So the initial public offering was 5 bob per share. Okay, so this is what you pay per share, 5 bob. But what happens after the IPO now? The laws of supply and demand, the interaction between the buyers and the sellers, just like in any market, will determine where the price goes after the IPO. So the price of Safaricom is currently at 25. There was a time the price of Safaricom was, let's say 30 or 35. So it's the investors, or rather the interaction between the investors, basically putting it simply, between the investors, the buyers and the sellers in the market, that determines where the share price will go after the IPO, the initial public offering. Okay, so that's what you see every day. So the share price will continue fluctuating. So like Olympia is currently trading at, I think, 2.82, and that's a change of 6.82% from yesterday. So that's the whole thing about the stock market. Every day, the buying and selling determines where the share price will move. So the companies that don't have high demand, the share price will fall. If a company is having high demand, the share price will continue rising. Another thing that determines share price is the performance of a company. I know you guys have now started investing and you'll start noticing this thing. So the moment we have, let's say, news, let's say a company has released its financial reports, or rather they are good news. Like there was the news that came out a few months ago, EABL, the EABL thing, the share transfer of EABL to, what's the name? Let me remember. Basically, when you have good news of a company, the share price will perform well. I remember that time ABL moved around 23% in a day. Okay, and of late, the financial services companies have been releasing their reports, and you have been seeing that the financial companies have had good reports, they have had profitable years. So the moment investors see that in the company, they get confidence in the performance of the company, and then they buy the company, and then the price of the company rises. One thing I've noticed is most companies, after they've had good news, they will get at least a 5% increase in share price. Oh, I've remembered the name, Diageo. Diageo is planning to increase its stake in EABL. So the moment Diageo announced that, the moment we got that announcement, the share price of EABL rose by 23%. And that's how the price in the market fluctuates. Those are some of the things that influence the prices of the various shares. Okay. You had asked, let me show you the different categories. So we have various categories in the market. So for the value stocks, let me mention some value stocks. For value stocks, we have companies like EABL. Yeah, EABL is a value stock. We have BAT, British American Tobacco is a value stock. Bamburi is also a good value stock. And I would say even Stanbic Holdings is a good value stock. For growth stocks, we have mostly the banks. Banks would be considered growth stocks. We have Equity Bank, we have KCB, we have Safaricom, and we have finally one that's not a bank, Can General. So growth stocks, Equity, KCB, Safaricom. Value stocks, Bamburi Cement, British American Tobacco, and EABL. I think those are good examples. When we talk about the US market, I'll give you the US growth stocks, the US value stocks. Any other question? Let me look at the questions. How much would you recommend one to start to invest with? 1K, 5K, 100K? Okay. When it comes to investing, it depends on the companies you want to buy. You can even start with even 100 bob if you want to buy the penny stocks. See, the penny stocks, like Uchumi is currently trading at 0.27 bob. 0.27, that's 27 cents. So if you want to buy 100 shares of Uchumi, you would spend 27 bob. And then maybe the trading fee of 2%. So let's say 30 bob, you see? So it depends. There's no recommended amount for you to start with. The only thing I can tell you is, just like any investment, the higher the amount you invest, the higher the gains. And also the same thing with dividends. If you manage to buy, let's say, Safaricom shares, someone who has bought, let's say, 100 Safaricom shares and someone who has bought 1,000,000 Safaricom shares will not earn the same amount, basically, especially when it comes to dividends, right? So there's no recommended amount. You can start with any amount you want, just depending on the shares you want to buy. There are some expensive shares in the market and there are some cheap shares. So let's say let's say you want to invest in a company like Stanchart, let's say. Stanchart is currently trading, I think, at around 144, let's say 144.25 there, 144 shillings. So if you want to buy 100 shares of Stanchart, you would need to have 14,400 shillings, plus now the trading fees. Let's say 14,500 shillings, okay? If you want to buy Safaricom is currently trading at 24 bob. If you want to buy 100 shares of Safaricom, you would need 2,400. So that's the difference. So there's no minimum amount. It just depends on the amount of shares you want to buy. But please note, guys, CMA recently approved the trading of fractional shares in the market. And what do I mean by fractional shares? Fractional shares basically are normally you needed to buy a whole share when investing in the Kenyan stock market. You needed, if it's Kaba Seed, which is currently trading at 11.8 shillings, you needed to buy a whole share at 11.8 shillings. If it's, let's say, you wanted to buy a company like Williamson Tea, which is trading at 145 shillings, you needed to buy a whole share at 145. But when you buy a fraction of a share, you're basically buying a portion of a whole share. You know, some guys might not be able to afford a whole share. Like, not many guys will be able to have 14,500 to buy 100 shares of Williamson Tea. That's why CMA found it right to introduce the trading of fractional shares. This was already happening in the US market, but in the Kenyan market, it was not approved. And Hisa has been approved as a pioneer to allow the trading of fractional shares. So when I say the trading of fractional shares will be a game changer in the markets, because you will now be able to invest in these expensive companies. I'm telling you, companies like Williamson Tea, companies like Kapchorwa, yeah, with just little money, yeah. So there's no minimum amount I would recommend for you to start with. Just start with the amount you have. Please state again where I can register to CDS on Hisa app. On the app, just go on the app, click on invest button on the app. This is Francis Adas, Francis M. On the app, click on the invest button. Then you'll see invest. Under invest, you'll see Kenyan stocks, US ETFs, and CDSC. Click on the CDS button, and you'll be able to open an account after clicking on the CDS button. That's how you open a CDS account on the Hisa app. So what are ETFs and which are the best to put my money in? I think I answered that. I think that's it. I close the meeting. I think there's one I need to go through. Let me take you through some of the best performing shares in the stock market. So this can also give you an idea of where to invest. So I'm going to give you, you know, most of you guys would be surprised that some of the companies you think are the best companies in the market have actually not been the best performers in the market. So these are the companies that have performed well in 2022. By YTD, I mean year to date. Okay, so but when I say that 2% YTD, this means that the share price of the company has gained a return of 32%. And please note, this is one of the factors that makes stocks, or rather investing in stocks, a good investment. Because if you look at bonds, let's say the normal IFBs, the infrastructural bonds, the latest infrastructural bond had a coupon rate of, let's say, I think 13.94, right? That 13% coupon rate annually. And you see, there's a stock that can give you that 2% annually. So that's the advantage of investing in stocks. But at the same time, remember, guys, you need to diversify your investment. You need to have some funds in equities, have some funds in bonds, have some funds in ETFs. Yeah. So for stocks, the biggest gainer this year has been Olympia. I don't know what's happening to Olympia. Olympia has really performed really well this year. So far, the company has gained 32% year-to-date returns. And actually, as of yesterday, it was the biggest gainer, actually. It was among the top gainer in the NSE. It gained 6.82%, yeah, 6.82%, followed by Stanbic, which gained 4.81%. So these are some of the biggest gainers in the market, the best performing shares this year. So Olympia gained 32%. What does Olympia do? Olympia is mainly an investor in companies dealing with the manufacture of products in the construction industry, mainly the tiles, door frames, cleaning chemicals, and PVC windows, all that. Okay. The second best performing company is Limuru Tea. I think most of you guys have heard of this company. Limuru Tea has gained at 1.3% year to date. Actually, it started the year at around 320. Yeah. And Limuru Tea is engaged in the growing of green leaf tea, and it has like huge tracts of land in Limuru town. Yeah. Then we have the third best performing company has been NCBA. NCBA has gained 31% year to date. Okay, so I think I don't need to talk about NCBA. NCBA is just a bank. Yeah. The fourth best performing company has been East African Portland Cement, which has gained 19.8% year to date. So East African Cement, I think most of you guys would know East African Portland Cement because of Blue Triangle Cement. If you guys have had any construction, you know Blue Triangle Cement. So one of its main products is Blue Triangle. So we have cement, mortar, and the concrete, etc. For construction of tiles, paving blocks, etc. etc. The fifth best performing company has been Williamson Tea Kenya, gaining a 15.4% year to date. Williamson Tea is just like Limuru Tea. It's an agricultural company, and mostly it engages in the cultivation, manufacture, and sale of tea in Kenya. It has 40 farms, one in Changoi, Kaimosi, Kapchorwa, and Tinderet. Yeah, I think that's it for now. These are some of the companies you guys can watch: Olympia, Limuru Tea, NCBA, East African Portland Cement, and Williamson Tea. I think that's it from me, unless you guys have questions. Let me lower all attendees' hand. If you have a question, you can ask. Raise your hand now if you have a question. Okay, Peter has a question.
Hello, can you hear me?
Yes, I can hear you.
I was asking, has fractional buying started in Kenya? Because you tried buying, but telling me you still have to buy in batches of 100. So can you clarify whether you can still buy?
No, it's in the process. It's in the process. It was actually approved last week, so it's in the process of being finalized, and once it's done, we'll inform you guys.
Okay.
Yeah, so I just mentioned it so that you guys can prepare for that. Christina, you have a question?
I'm asking about the Hisa app. I think I have an issue with my account.
Okay.
Not yet been approved. I'm not able to buy or sell from the app. And then I want to know what is this thing about stop loss, and because when I tried to buy, there was that option of buy stop loss or something. There's another option. Can you explain, and where does it apply? In what investment does that apply in? Thank you.
Okay, nice. Okay, so we have a stop loss and take profit. So in the market, a stop loss basically means, let's say you bought, let me give you an example. Let's say you bought, Safaricom is currently trading at 24 bob, right? So you bought Safaricom at 24 bob, and you set a stop loss at 20 bob. What do you mean by 20 bob? A stop loss is self-explanatory. When I say a stop loss, I'm saying if this Safaricom share drops below 20 or drops below 20, please sell my shares and get me out of the market. Okay, that's what we mean by a stop loss. So basically, you buy Safaricom at 24, you set a stop loss at 20. This means that if the share price of Safaricom falls to 20, please sell my shares automatically and get me out of this trade. Please offload my shares at 20 bob. Why do guys use a stop loss? Use a stop loss to avoid getting huge losses in the market. You see, like the situation where the Kenya Airways investors, the Uchumi investors, like let's say the company was at 10 bob and something happens and now the company is trading at 1 bob or at cents, like let's say 50 cents. Yeah, so a good investor who had set a stop loss, let's say you bought a company at 10 bob and you set a stop loss at 8 bob, at least you'll be able to save some money and not lose all your money. Yeah, so if the company, so you, by setting a stop loss, you are basically putting a shield, or rather a wall, like if this company goes below this price, I don't want it anymore, please sell my shares. Same thing with take profit. Take profit is now the opposite of a stop loss. When you set a take profit, you say, let's say I bought Safaricom at 24. I'm like, if this share goes to 30 bob, that would be good for me, enough with the markets, enough with the trade, or enough with the shares. Let me take my profit at 30 bob. So for a take profit, when you set a take profit at 30 bob, that means you want to sell your share. If this share price rises to 30 bob, please sell my shares automatically at 30 bob. Okay, this is used by investors to make sure that they take advantage of the quick movements in the market. Let's say you know your share might go to 30, and then you bought the share 24, the share goes to 30. Then in a few days, the share goes back to 22. But you see, if you had set a take profit, when the share goes to 30, immediately your shares are sold and you get the profit. That's why it's called a take profit. For stop loss, you set a stop loss to limit the amount of loss you can experience in the markets. Let's go to the order types. When it comes to the order types, we have like different types of orders. We have a market order. When you click, or rather select a market order means you want to buy the share at the current best available price. The difference between a market order and the other types of orders, let's say the buy stop and the buy limit, it means that for the market order, you're not in control as an investor. If the current best price available in the market of Safaricom is 24.50, that's the share price at which you'll buy the share, then the Safaricom share. Okay, that's the difference between a market order, and it's self-explanatory, because when you say a market order, that means you're buying at the market price, and the other types of order types. Let's say when you select, let's say you select a buy stop. A buy stop now allows you to be specific at what price you want to buy the share. What do I mean by being specific? A buy stop gives you more power as an investor to determine the price at which you want to buy to purchase your shares. I mean, so let's say Safaricom is trading at 24, and you say, okay, I don't think I want to buy this share at 24. I would actually like to buy this share at 20. When I think this share is going to fall, so let me not buy at 24. 24 will be expensive. Let me set a limit of 20. Let me set a limit of 20. So you can set a buy limit at 20. So the moment the share price falls to 20, you will be filled in and you'll be able to buy shares. Let's go to a buy stop. Let's say you're saying, okay, Safaricom is currently trading at 24, but I'll not buy it until it proves that it can go to 26. So you can set a stop at 26. So the moment the share price rises to 26, that's when you'll be filled. You will buy the share price at 26. That's the difference between the various order types. Okay, Christina, did you understand?
Yes, I get it.
Yeah.
So, but I'm asking, is that so? Does the stop loss and the take profit apply to all types of shares, like in all types of stocks?
Yeah.
Am I it? Okay.
Okay. Any final questions so that we can end the meeting? Peter has a question.
If you click on the app,
yeah,
on CDSC, if you click, I can see my details on CDSC already connected. So do I have to like move away from my current broker to join Hisa, or I still continue with my current broker but still trading Hisa? I don't know.
Okay, you can choose to transfer shares.
Okay.
So to transfer shares, currently there's an on and button. I think you can see it there, but we have not made it online. But what you can do, you can go to your broker. It told me is Ngenya something. Yeah, and fill a CDS 4A form. And then fill a CDS A form and CDS B form and CDS 4A form, and then take it to the broker you want to move to, which is Faida. But for now, you can just click on trading account, open new trading account, and you'll be able to buy shares.
Okay, so do I have to click open new accounts for me to be able to trade?
Yeah.
Without necessarily transferring my shares?
Yeah.
Okay, so I think that's okay.
Okay. I think that's it for today, guys. Thank you so much. I hope you guys have learned a lot. And thank you for attending the webinar. Next week, we talk about US shares and ETFs. I hope you guys are excited about that. Yeah, have an amazing time. All right, bye guys.